Something big is brewing in the altcoin market. Stellar XLM is flashing breakout signals with a 50-cent target in sight. Hedera HBAR bulls are still holding out for $1.80, and SEI's explosive on-chain growth is sparking a head-to-head showdown with Hedera's institutional firepower. But is this the start of a major rally, or just another hype cycle waiting to fade? Today, we break down the charts, the catalysts, and the key events you can't afford to ignore. The crypto markets have a funny way of teasing traders. They'll go eerily quiet right before something big happens. And right now, Stellar Lumens XLM is doing exactly that. On the charts, XLM has been moving in a tight, deliberate squeeze inside a wedge pattern for weeks. Price action is getting narrower, volatility is drying up, and every single candle feels like it's setting the stage for a decisive breakout. Why $50 matters? This isn't just a random price target. It's a psychological barrier and a level that's historically acted as a magnet for both bulls and bears. When Stellar last approached this zone, it faced heavy resistance, but a clean break above it could unlock a rally that leaves latecomers chasing green candles. The bullish case, classic breakout setup. Wedge patterns often lead to sharp upside bursts when the upper boundary is breached. Sneaky volume accumulation. Smart money doesn't announce its moves, and the recent uptick in buy-side volume hints that larger players might already be positioning. Macro market tailwinds. Bitcoin's relative stability has given mid-cap altcoins like XLM some breathing room, attracting fresh capital from traders hunting the next mover. The bearish trap. Of course, wedge breakouts can be brutal for the unprepared. False breakouts, or bull traps, lure traders in only to slam them with a sharp reversal. With so much attention on this setup, market makers could easily exploit retail FOMO before sending the price back into consolidation. The big question, are we looking at the start of a genuine stellar rally, or is this just the perfect setup for a ruthless shakeout? Either way, the next few days could decide whether XLM becomes one of August's biggest winners, or just another almost story in crypto history. On the surface, Stellar's latest move looks like every trader's dream. Sharp green candles, surging volume, and a chart that seems to be breaking out of months of sideways action. But seasoned investors know this story all too well. The big question is why the price is moving, and whether it can last. Some analysts believe the current rally is a textbook short squeeze, where traders betting against XLM suddenly find themselves trapped, rushing to buy back their positions, which pushes the price even higher in a short burst. If that's the case, the momentum could fade as quickly as it began. But there's another, more bullish narrative brewing. Under the hood, Stellar has been quietly expanding its partnerships and deepening its role in cross-border payments. Institutional interest, while still modest compared to giants like Ripple, is slowly building. If these fundamental developments are what's fueling the move, this pump might be more than just a flash in the pan. It could be the start of a longer-term uptrend. The truth, the next few trading sessions will be critical. If XLM can hold its newly reclaimed price levels without massive volume spikes or sharp pullbacks, that's a sign that buyers are here to stay. If not, we might be looking at yet another crypto head fake. The breakout signal. Is $50 within reach? XLM has officially broken through a critical resistance level that traders have been watching for months, a price barrier that previously acted like an impenetrable wall. On the technical charts, this breakout isn't just a random spike. It's supported by increasing volume, rising RSI momentum, and a tightening Bollinger Band squeeze that's now expanding. Analysts say this setup could trigger a measured move towards 50 cents, representing a potential 20% rally from current levels. But it's not just technical traders getting excited. On-chain data reveals a surge in wallet activations and transaction counts, hinting that both retail and institutional participants are stepping in. If momentum holds and the breakout is confirmed with a successful retest of support, $50 might just be the first milestone in a much larger upward journey. But as always in crypto, the market loves to test conviction, and overextended rallies can reverse quickly if volume dries up. Why August could change everything for XLM. August isn't just another month on the calendar for Stellar. It could mark a pivotal inflection point in XLM's trajectory. Several key developments are converging. regulatory clarity in multiple jurisdictions, upcoming protocol upgrades aimed at boosting transaction throughput, and rumored partnership announcements that could expand Stellar's cross-border payment network. Historically, August has been a month where XLM has seen outsized moves, often aligning with broader altcoin cycles. This time, however, there's an added macro twist. Weakening fiat currencies in emerging markets are driving renewed interest in blockchain-based remittances, a core use case for Stellar. Traders are watching closely for confirmation signals, increased developer activity, growing liquidity on major exchanges, and a breakout in the XLM BTC pair. If these align, August could ignite a fresh wave of adoption and price acceleration, potentially setting the stage for a strong finish to the year. But timing is everything. Without follow-through buying pressure, even bullish catalysts can fizzle out. That's why many analysts are calling August the month where Stellar either proves its staying power or risks fading back into consolidation. SEI versus Hedera, two Layer 1 heavyweights, two very different stories. In the battle for Layer 1 dominance, SEI and Hedera represent two vastly different approaches, both showing strength but in their own lanes. SEI has been making waves with explosive on-chain growth. Daily active addresses, transaction volumes, and DeFi participation are surging, fueled by its speed-focused architecture and developer-friendly ecosystem. The network's aggressive push into decentralized trading has attracted liquidity providers and traders looking for sub-second finality and low fees. Hedera, on the other hand, leans on its heavyweight institutional backers, including Google, IBM, and Boeing, to drive adoption. Rather than chasing the DeFi hype cycle, Hedera is carving out a niche in enterprise-grade solutions, powering supply chain tracking, carbon credit markets, and high-trust payment systems. Its governance council structure gives it a level of corporate credibility most blockchains can't match. This is a classic growth versus stability matchup. SEI's meteoric rise in on-chain activity hints at a fast-moving innovation for ethos, but rapid growth can also invite volatility and network strain. Hedera's steady, enterprise-driven expansion may seem slower, but it's built for long-term sustainability and real-world adoption. For investors, the choice between SEI and Hedera may come down to time horizon and risk appetite. SEI offers speed and upside potential. Hedera delivers trust and institutional security. The Hashgraph Group launches SSI Digital Identity Platform on Hedera. In a significant leap toward the decentralized identity future, the Hashgraph Group has officially rolled out its self-sovereign identity SSI platform on the Hedera network. This launch aims to give individuals and organizations complete control over their digital identities without relying on centralized authorities that store and monetize personal data. Built on Hedera's fast, secure, and energy-efficient Hashgraph consensus, the SSI platform allows users to create, manage, and verify identity credentials seamlessly. From government-issued IDs to educational certificates and even healthcare records, these credentials can now be stored cryptographically, verified in real time, and shared selectively, all without exposing sensitive information. The implications are massive. For consumers, it means fewer data breaches and full ownership of personal information. For businesses, it streamlines KYC AML compliance, reduces fraud risk, and lowers operational costs. For governments, it lays the groundwork for trusted digital public services that can scale globally. This move also aligns with a broader push from Layer 1 networks to offer real-world utility beyond token speculation. By choosing Hedera, the Hashgraph Group taps into a network with strong institutional ties, from Google and IBM to Standard Bank, ensuring the platform has the credibility and reach to drive adoption in finance, supply chain, and beyond. With SSI solutions becoming a key pillar of Web3's next phase, this launch could position Hedera as a leader in trust-based digital infrastructure, directly competing with other blockchain identity solutions like Polygon ID and WorldCoin's World ID. Are HBAR bulls still eyeing $1.80 amid Hedera ETF delays? Hedera's HBAR has long carried the bullish narrative of being one of the most institutionally connected projects in the crypto space, backed by governing council members like Google, IBM, and Boeing. But despite its technological prowess and real-world adoption through enterprise-grade applications, the token's price action has been caught in the gravitational pull of broader market sentiment. One catalyst many bulls had pinned their hopes on was the potential approval of a Hedera-focused ETF, a move that could have unlocked a fresh wave of liquidity and investor interest. Yet, with regulatory bottlenecks slowing that possibility, the immediate timeline for such a product remains murky. This delay has left traders asking the hard question: can HBAR still make a push toward its long-touted $1.80 target without the ETF tailwind? Technical charts show that HBAR continues to respect its key support zones, with long-term accumulation patterns still visible. On-chain data also points to increasing wallet activity and consistent transaction throughput, a sign that the network remains fundamentally strong. The challenge lies in whether these fundamentals can outpace investor impatience in the absence of a major headline driver like an ETF. If market sentiment shifts in favor of altcoins and Hedera's enterprise deals begin translating into sustained token demand, the $1.80 mark is not out of reach. However, without a spark to reignite bullish momentum, that milestone may stay on the someday list rather than the near-term horizon. From Stellar's tightening wedge and speculative surge to SEI's rapid on-chain adoption and Hedera's institutional-grade push, the market is buzzing with narratives that could define the next altcoin cycle. While XLM traders wrestle with questions of sustainability, Hedera's bulls are weighing regulatory headwinds against the promise of ETF-driven inflows and enterprise adoption. In this environment, momentum can flip to volatility in seconds, and the networks that pair real-world utility with market excitement may capture the lion's share of attention and capital. Whether you're chasing breakout patterns, betting on institutional adoption, or positioning for regulatory catalysts, the coming weeks could be pivotal in separating fleeting hype from lasting blockchain impact. The crypto landscape is shifting fast, and every headline we covered today could be a signal or a setup for what's next. From Stellar's potential breakout to Hedera's ETF speculation and SEI's growth story, the next big move might already be in motion. Now it's your turn. Which project do you think will outperform in the next 90 days? XLM, HBAR, or SEI? Drop your predictions in the comments. If you found this breakdown useful, hit the like button, share this with your fellow traders, and subscribe so you don't miss our next deep dive into the moves shaping the crypto markets. Until next time, stay sharp, trade smart, and never stop learning.